Hey guys, and welcome back to Smart Money Minds. Recently, in the beginning of 2020, we've got multiple big stock names that are going to all-time highs. That includes the S&P 500, you got Apple, you got Tesla, and Google, just to name a few. For those who are already invested in the stock, that's awesome for you. That's good for you for making awesome profits on paper so far. But for those who are watching on the sidelines, you might feel like you've missed out and are eager to get back into it. In today's episode, I'm going to be going over how to trade stocks that are in all-time highs. All-time high stocks are generally pretty easy to spot. They're in uptrends and they're beating out all previous prices and reaching a new high in the company's history. And this can lead to euphoria for investors, as it means that everything is moving bullish. They're all in the green and no one is losing money. However, it is because that people are in this euphoric mode that we have to be cautious. We have to be following the flow of money, yes, and following the momentum of profits so that we can profit ourselves, but we have to see where the top is, because what goes up must come down. And it depends how much it comes down by. Let's look at a company like Square. It goes to an all-time high in October 2018, but it dropped more than half its share price in 2 months from $101 to $49. You don't want to be the guy who's buying at $101 and watching the stock drop to $49 within 2 months. So here's a couple of strategies and tips that I find useful when trading in all-time high scenarios. Number one is don't try to short. Yes, you might have some victories here and there, but because you're going counter trend against a very bullish move, you're taking on a lot more risk and you're much more likely to lose than win. The stock market is unpredictable as it is, and it can exceed your logical explanations. So due to the fact that there's no technical analysis resistance, the price can just continue to run up. So if you take a look at Beyond Meats for a good example, when it started at $25 and it went up to $239. So you see, it's very difficult to time the top, as there's no indicator that will really give you an accurate clue into these euphoric conditions. So number two is, if you're in a bullish position, be cautious of psychological price numbers. That means we're talking about 10, 100, 200, 250, 500. Those whole numbers act as a sort of psychological resistance for many people. If you take a look recently at Tesla, we hit 500 and it topped out twice without reaching 500 and it started to consolidate. Often these are just points of consolidation. It doesn't mean that it can't break 500 and have another leg up after taking a short break, and that's exactly what Tesla did. Now let's take a look at Apple, and Apple had a range of $300 and it took them 4 days before breaking out of that range of $299 and $301. So there's a bit of psychological sort of resistance there for people wanting to buy that price. So let's say you are planning to take a short. The only really safe play that you got for playing these all-time high plays are either to wait for a double top, so the price hitting 500 once, dipping down, hitting 500 again, and it can't break, or you gotta wait for a short-term trend change so that it goes downwards into consolidation. Number three is, if you're in the profit, then set a stop at a higher low so that it doesn't turn around and turn that win that you have into a loss. For example, if I entered Tesla at $327 and now it's almost at $500, I would set a stop loss at $402. As you see here, that is a higher low. The reason I do this is to ensure that I stay profitable. Some people get euphoric about their stocks at all-time highs, and then they check back maybe a couple of days later or a week later, and they realize they're at a loss now because the stock dropped dramatically and now is below their buying price. The reason I would set my stop at 402 is that I guarantee my profits. If the stock price drops below 402, then I know that the short-term trend has changed and it could go the other way really easily. So when the trend has changed, it's likely no longer in my benefit to be in that stock anymore. Say the stock does turn around and goes back to all-time high, Some people will have FOMO, but for me, I rather lock in that profit and stay disciplined in my stock trading, because that will guarantee my success in the long run instead of taking a fluke play here and there. Number 4 is beware of any earnings dates, company news, and political news that can hinder the trend. What I mean by that is to look at things like a possible war between US and Iran, or US trade policies with China, etc. On the day that the Iranians bombed the Iraqi airbase that were hosting the American troops, the S&P 500 dropped drastically after hours. Now in January, we're looking at Apple, and with its earnings in the first week of February, which is on February 3rd, that would be a reason for people to sell and to consolidate in the stock. Perhaps large shareholders are holding on to then until they start dumping some of their shares. For all we know, it may not happen, but it is something to be aware of and to watch closely for, because you can be caught off guard if you don't know what the earning date is and you're holding shares past those dates. In the end, all-time high stocks are what we're all looking for. We want to be in the stock market to do well so that people have money to retire and to show that the economy is in a healthy and growing state. In the comments below, let me know if you're trading a stock that's at all-time highs and what kind of strategies you're using. If you enjoyed my video, hit me a like, make sure you subscribe, and we'll see you guys next time.